Good morning and welcome to this webinar, and of course good afternoon and good evening for those of you listening from around the world. My name is Deirdre Fulton. I'm partner at Midas Aviation and I will be moderating today's discussion. So I'm joined today by John Grant, OEG's senior analyst, who's been tracking the impacts of COVID-19 since the start of the coronavirus outbreak. And we also have Rothna Begum, OEG's Director of Data here, who of course has been working around the clock in recent weeks. And the third member of our panel is Professor Cheng Li, President of the Institute for Aviation Research and a leading academic who specialises in the China market. And hopefully we'll get some interesting insights today from Cheng. Lastly, but by no means least, we have Brendan Sobey from Sobey Aviation joining us. Brendan is an independent aviation consultant based in Singapore with 20 years of experience of analysing airlines and their performance. So we'll hear from him on the latest developments in Asia. So welcome to all of you who are joining us today, and thank you for finding time, and to all of you listening, mostly at home I expect. I think there have been a lot of hastily constructed home-based workspaces in the last few weeks. And of course, we're not in our usual soundproofed office today. So there may well be some background noises, barking dogs, noisy children and other distractions. And that's just my house. So we hope not, and we'll do our best to minimise any background noise. So today we're going to use the OEG data and analysis and have our experts on the panel take a deeper look into the COVID-19 crisis and the ongoing impact on the air travel market. We'll look at how OEG is handling the ever-changing data situation and what some of the changes mean for global and regional aviation and what the consequences of this pandemic might be for aviation. I stress the word might. We then hope to be able to answer some of your questions, so please send those into us using the question function. We'll also be sending everyone who's registered a copy of the recording of the webinar and the questions that we don't get to answer today, we'll hopefully be able to answer as a follow-up. I'd also like to say, before we dive in, that the changes being faced by the industry and indeed by all of us in our personal and work lives at the moment are so rapid that it's hard to keep track of them from one day to the next. I think we probably have all experienced that in recent weeks. And sometimes even from 1 hour to the next, things are changing so quickly. So we're working with the best information that we have as of today, right now. And Rothna is going to talk to us in a moment about how AG is managing that situation. And of course, we'd also like to say a big thank you to those airlines and airports who are dealing with this crisis on the ground and acknowledge the many hundreds of thousands of staff in the industry who are currently facing a very uncertain future. So Rothna, we'll come to you now. Your team are responsible for managing global airline schedules, aren't they?
Yes, thanks Deirdre, and good afternoon everyone. Yes, we have a team of specialists here who live and breathe schedules data. They have built up their expertise and strong relationships with the airlines over many years.
So how, Rothna, do you manage the data coming in?
The data is received in a range of different formats depending on our airline partners and preferences. So we receive them via SSMs, SIMs or APIs. Some can log on via our OAG Links portal and others we receive via Excel or even PDF format. The team work closely with our airline partners to ensure we have captured their exact requirements and we manage the information on each carrier's file submission. So when we process the file, we know what to expect, we know what the rules to apply if any data elements are missing, and we know what exceptions to apply. So we are all well informed about our airline partners and the data that is supplied to us.
Okay, great. I guess it's been volume, hasn't it? Really, that's the main difference. There have been so many changes and so many
Yes.
things to keep track of in the last few days. Um, so what sort of checking process do you have in place to validate the data that's coming in?
So there are hundreds, literally hundreds of automated checks to validate and verify the data before it's accepted into our system to ensure its integrity. So what we do is we ingest all the changes that need to be applied to a schedule, including any that require amending to ensure all necessary data elements are complete and compliant. So, for example, this could be adding missing terminals or changing an airline's internal aircraft codes to the industry standard codes, or applying defaults such as secure flight indicators or electronic ticketing and so forth. So we know we're used to working against the clock as we have customers requiring this information in real time. So on any given day, this is an extraordinary task.
It's probably an understatement, though, isn't it, to say
Yeah,
it's been a
yeah,
busy time then for you lately?
very busy.
Yeah.
Um, there have been unprecedented changes to airline schedules over the past few weeks, months even. Our core schedules team is verifying and processing additional files to ensure the updates can be as timely as possible. But we know just how important this is for airlines and indeed everyone who depends on this data.
Okay. Um, and how are airlines responding to this situation?
Well, despite such challenging times, airlines are working with us to send changes as quickly as possible. But we're also reaching out to them to ensure they send us their latest updates and trying to make that process as easy as possible for them. Understandably, their immediate focus is to manage their operational issues and looking to rebook and repatriate their passengers and then address future planned operations with more certainty.
Yeah, it's a tricky time, isn't it? And understandably, priorities are pulling airlines in lots of different directions at the moment. I guess there's also concerns, aren't there, about slot allocation rules?
Yes, many airlines would have been concerned about the impact of not operating their allocated airport slot, which requires them to fly at least 80% of their takeoff and landing slots in order to retain the same slot for the following season. So the EU's recent decision to suspend this requirement for the time being has seen more and more airlines starting to file reduced number of operations.
So I guess then we're going to see even more changes in the system, aren't we, as a result of that?
Yeah, definitely. We've had a surge of updates over the last week since the EU suspension, and we're monitoring all the announcements coming through from the airlines. And recently, we made some technological investments, which are ensuring our systems can process even faster. And obviously, we're lucky to have such an experienced team.
Yeah, absolutely. That makes all the difference, doesn't it, when faced with something like this? And I guess there's a ripple, isn't there, every time that there is a change. A country closes its borders or shuts down its domestic flying, for example, then that ripples through, doesn't it, in terms of
Yes,
spiking
I mean it's been
workload.
a huge task trying to keep up with it, but we're managing well.
Okay, good to hear. And has this had an impact on customers' needs and customers' demands?
Of course, it's had a knock-on effect, as you can imagine, and we're seeing growing number of requests for increased frequency. So not only from travel-related businesses, airlines, OTAs, as you would expect, but also logistics, hospitality, energy, finance, and infrastructure sectors who all depend on the information to mitigate their own risks and plan.
Absolutely. It's really pervasive, isn't it? And almost unquantifiable to try and get a handle on all of the things that this touches on, isn't it?
Yes, indeed.
Okay.
Yeah.
Okay, thanks, Rothnna. I think that's really helpful, and we may get some questions that we'll take at the end about data, and we'll deal with those when we get to them.
Thank you.
So thank you for that, John. We're gonna come to you now. We are in, I think, week 12 of this event now. Even the suspension of flights from the US to Schengen countries that Rothnna mentioned was just 2 weeks ago. That now seems a little bit like ancient history, doesn't it? Keeping track of who's flying to, and to where is becoming increasingly challenging. And we're seeing this shift, aren't we, from east to west at the moment in terms of the impact on aviation.
Yes, we are. Yes, we certainly are. Good afternoon, everyone, or good evening. I've never witnessed anything like this in my life or my long career in aviation. This is a very challenging and disturbing time for the whole industry. And as you say, Deirdre, we started tracking this from the 20th of January, and we're now in week 10 of this event, and it's hard
I lost
to remember.
a couple of weeks there.
It's hard to remember what happened 8 weeks ago, let alone 3 or 4 weeks ago, because the things are changing so quickly. But yes, the event, and let's call it an event, started obviously, as we all know, in China, in Wuhan, and has subsequently wrapped the globe, spreading in a westerly direction into Europe, which I think about 5 days ago we thought was the epicenter of the event, and equally easterly towards the Americas, and perhaps today we think the United States is becoming the epicenter of the event. But in terms of capacity, the number of scheduled flights is now down by a staggering 29% compared to last week, as many of the European carriers started to implement whole-scale cutbacks to their networks, and I suspect we will see even more cuts next week. The US Big Four airlines, as I like to describe them, United, American, Delta, and Southwest, have yet to really put their schedule changes through to OAG, and we're expecting them this week. So we are in a situation where we are on a roller coaster, and we're heading downwards at a very rapid speed. And a lot of the discussion, not just here but in the industry, is about how quickly is that roller coaster going to invert and start to improve, or will it be a shallow dip, or will it be a sharp V that we see in terms of the return? So as Chang will tell you, may you live in interesting times.
Yeah. Okay. So let's move on to our next slide, and this really, I think, sort of illustrates what we were talking about with Rothnna, and what we're all experiencing, doesn't it?
Absolutely. So
and these are just since Monday.
Well, this is Monday, and since then we've actually reached a point where airports are now closing as well. So we're not just talking about airline capacity being dramatically cut. We are actually seeing airports closing because their business is just not there. It's disappeared. And the world may well re-emerge in a very different place and with a very different perspective. But Singapore Airlines, who had hung on for probably 8 or 9 weeks, have now cut their capacity quite significantly to just 1 in 10 of their services are operating. Emirates and Etihad announced effectively today would be the last day of their operations, but have subsequently put some flights in for repatriation purposes. India's domestic market, which is huge and has been one of the fastest growing markets in the world, suddenly slowing down. Air New Zealand suspends all its international flying, which is a great shame, because for many years they operated from Los Angeles to London, and they had already announced that they were going to drop that service from October, but that has gone, been dropped, and will not return, which is a great shame. Ryanair grounds all its flights, and in an ultra generous gesture from Michael O'Leary, he's offered any European government access to the Ryanair aircraft to repatriate people from around the European Union, although he's not offering any free tea or coffee. So it's business as usual for Michael. So you know, it's a grim situation that we face, and you know, part of this is that key question: have we reached the bottom yet?
Yeah. Okay. Let's pull ourselves back a little bit from all of that. What feels like really bad news, and let's have a look at the regional position. It's not going to be any less bad, though, is it? When you see the scale, I guess what we illustrate here really is that shift to Europe in terms of cancellations and reductions, isn't it?
Absolutely. So this chart shows you the week-on-week changes in both frequencies in absolute terms and also in percentage terms. So you can see that there is a 60% reduction in flying from Europe, and the Middle East was 45, but that 45, of course, now is probably going to be nearer 60, maybe even 70%, because we have Emirates and Etihad, and their changes are yet to be reflected and passed through the system. And if there is a glimmer of hope, it is that the rate of change in the Asia Pacific region has, in selected markets, slowed down, and there are some very small signs of recovery, although of course the Indian domestic network cuts that we mentioned earlier, and which are being applied from this week, will further damage the amount of frequency we have there. But there is, although it's not relevant for the Asia region generally, there is a very good daily update that Eurocontrol are producing now that I've seen, that shows in terms of movements that they are seeing from airlines across European airspace, reductions week on week. So it's quite interesting. This is a really good, if there's any students out there, you know, and you're doing your thesis, this is probably a great subject to use for that particular project. But for us in the industry, it's worrying times for sure.
Yeah. Okay. So this, I suppose, really illustrates what you were alluding to in terms of there being some very small signs that certain markets are starting to have a little bit less pain, is probably the best way to put it.
Yeah. So as long as you're not colorblind, this is a very helpful slide to show you how capacity has been changing on a percentage basis by key markets. So if you look across the globe and the headline numbers, which are at the top, and all countries, you can see that generally we're still in this situation where week on week we are seeing quite significant cutbacks, and obviously the biggest week is that 23rd of March, where we got the minus 28%, built on the base of the changes in European capacity. But underneath that, you'll see two pieces of green, which are hopefully the green shoots of recovery that are beginning to emerge from China. And what we're trying to show you here is that although there is still reductions in capacity taking place, the rate of reduction has fallen back. So we're beginning to reach a point where we've shrunk back, we believe, to the absolute minimum, the absolute core amount of capacity that is being offered in those markets. And those hopeful green shoots we would like to expect and should see on next Monday, the 30th of March, are continuing to move forward. But there are some markets that are still seeing significant cutbacks on capacity week on week.
Yeah. And in fact, I think IATA said yesterday, I think it was yesterday, that they expect that Europe may face a greater impact now than Asia
Yes, I think so.
COVID-19. You think that's the case?
I think so, and I think partly that is because if you look at the number of airlines in Europe, it's much more fragmented. We've
Sure.
got plenty of airlines, and some of those are cash starved. From an industry perspective, this could not have happened at a worse point in the calendar year, particularly for European airlines and those in the Northern Hemisphere, because January, February, and March are traditionally their hardest months for new bookings, and cash reserves do take an impact. So for this to have occurred when people are just beginning to book and plan their holidays, to visit friends and family, and all of those great things we do in the summer season is alarming for the airlines. And that in part is why many airlines are, rather than allowing people to cancel reservations, are giving them credit notes for future travel so they can hang on to the cash
Yeah,
to preserve
yeah,
their liquidity, which is
and have some certainty maybe about future volumes.
hopefully so, yes. I mean, at some point they may well have to convert those credit notes into cash, but the airline is trying to keep the stickiness. And of course, they're doing things like extending frequent flyer programs and membership tier levels, etc., just to
Yeah,
try and
yeah,
keep some momentum and optimism out there in the market. But we've seen some big cuts in Asia, Hong Kong, Singapore has just happened, of course, and Tokyo this weekend is going into a lockdown, so that will probably have quite a significant impact on capacity into both Tokyo, Narita, and Haneda
yeah.
over the next week, I think, as the airlines cut back their capacity further.
Okay, let's take a look. Again, we're looking this week compared with the same week last year. But let's take a look at some of the country markets and what we've seen. I mean, there's a sort of interesting story here, isn't there? About there might be China might be tentatively in recovery, and then there are some other markets that are earlier in that curve, aren't they? Cheng, I'd like to bring you in here. We can
Mm.
really see the significant hit in the Chinese market, can't we? But now we're starting to see flights come back. What's your perspective on how the Chinese market has been affected? And I guess more importantly, can it recover?
Yes, Deidre. Hello, everyone. Deidre, yes, in China, actually, the worst period was February, as your
Yeah,
graph has shown. Now, in that time, most aircraft in China have been grounded. But we have seen recently, airline traffic has started to pick up. For example, I just checked the data, 2 days ago, on the 21st. Airlines, for example, China Southern has now got a 60% load factor, on average, and so it seems things are improving at the moment. So I think since once the coronavirus is being under control, then airlines can gradually, resume their traffic. That's what we have seen in China.
I guess the interesting question, Cheng, is so we know that airlines are putting frequency and capacity back into the domestic market, particularly in China. But is consumer confidence back yet?
Yeah, that's a good question. I think from my conversation with many friends in China, so basically the consumer confidence hasn't come back yet, so it would take a while for
Yeah.
them to resume to normal. But airlines basically had done a great job to improve consumer confidence. Yeah, to keep the aircraft hygiene and cleaned every
Yeah.
day.
Yeah, we're starting to see that, aren't we, now in right across the world. I've seen many stories of airlines reassuring travellers that the hygiene and the sort of cleaning standards are appropriate for the current situation we find ourselves in. Brendan, I'm hoping you're there. We had some troubles with the sound earlier. Can you give us any good news from the rest of Asia? Are we seeing any signs of tentative recovery there yet?
Certainly, the recovery is not as advanced as in China, where we've seen the recovery or the start of the recovery in the last few weeks.
Sure.
But in South Korea, there is some hope that that will follow next. Given the situation in South Korea seems to be coming under control. South Korea, I think, could see a recovery in the next few weeks, particularly in the domestic market. Now, Korea doesn't have a large domestic market. It's really just Jeju Island, which is the largest domestic route in the world. The largest route in the world, actually, but it's only really a one route market. So I think we would initially see a domestic recovery in South Korea with Jeju returning, but the international recovery will just take a lot longer. Similar to China, China has a much larger domestic market. The international recovery hasn't started yet in terms of passenger numbers. There might be more flights because of the incentive to fly, particularly for the Chinese airlines.
I think there's also there's also something around the narrative, I guess, around the world, around countries closing borders and stopping all flying. There's a degree, I guess, of traveling domestically. There are alternatives usually in most countries. If you can't fly, you can still take the train. You could still find another means of getting home. Whereas I think internationally is still in some markets very perceived as being risky.
Yeah. I mean, it's a consumer confidence issue, and also an essential travel issue. So, I mean, people are really only traveling essentially, and that's what we're seeing in Japan right now. The domestic market in Japan has held up more than other markets because we haven't seen the same issues with the virus as we've seen in a lot of the other countries. But actually the Japanese market could also, which hasn't gone down domestically as much as the other markets. Even what we're seeing now in Tokyo is a kind of a partial lockdown over the weekend. It's kind of just a warning up to people to stay home, but it's not a full lockdown. And the market so far has been quite resilient, relatively speaking, in Japan. Domestic passenger numbers have been down about 50% in Japan, which is nowhere near the reduction we've seen in any of the other countries. And that should pick up, assuming the situation doesn't worsen. So North Asia is generally looking a little bit brighter, and in terms of domestic markets, it really varies. In Southeast Asia, there's some countries like the Philippines that completely shut down domestic because they were trying to keep the virus from spreading from Manila to the provinces. But in other markets like Indonesia, the market has remained relatively resilient so far, although we don't really know what's going to happen in Indonesia because there's a bit risk
I think that's the challenge, isn't it? That actually, and I guess that's the case for Japan too. That there's a different approach to containment in these countries, or is it that actually in some cases they're behind the curve and the worst is yet to come? I hope not. But I think that's what's going to emerge, isn't it, over the coming weeks and months, that perhaps different actions that are taken by different countries or different parts of the world might have an impact in containing and spreading the curve and reducing the overall impact. John, you wanted to
I was just going to say, it's what we need to recognise in all of this is how interdependent these certainly five and perhaps to a degree Australia as well, countries are, the interdependency they all have on each other for trade and for what would in normal circumstances be travel. China, South Korea is a big market. South Korea to Japan, when there isn't a trade dispute, is a huge market. China to Thailand, the growth there in the last 5 years has been staggering. China, Singapore. So all of these are interrelated, and therefore, as China begins to lead out of this crisis and this event, it will impact these markets before it begins to, or it will impact these international markets before it impacts other international markets. And then, of course, you know, it will ripple out further into Southeast Asia and other markets. But I think it's a really interesting slide to show that the importance and the interdependency and how we're now all looking to China. Chang, we've heard about HNA and HNA Airlines and the group. What is the latest situation there? Have you got any insights for us?
Yes, about HNA Airlines, and they have now had the support from Hainan provisional government. So, the government now is supporting them with cash flow, and the airlines, in terms of their load factor, I think it's been picking up quite quickly. For example, I just got the data for Hainan Airlines. There's on the 21st of March, they operated 254 flights, and the average load factor was 62%.
Okay, that's good.
So, yeah,
that's
so that's good.
That's encouraging.
Yeah, and also look at Tianjin Airlines, that's within HNA Group. Is quite large airlines. They operated quite a lot of flights to Europe. So Tianjin Airlines operated 78 flights 2 days ago, and the average load factor was 61%. So the other airlines in the HNA Group basically are with sort of like a more or less similar load factors. And you can see the airlines has been, you know, operating, you know, it's quite a relatively good load factor. So
and I
that's
saw,
much needed cash flow into the airline. Yeah,
that's good. And I think I saw some numbers where IATA were actually saying the yields in the Chinese domestic market were actually slightly ahead of what they expected, which I think is reassuring, because I had a worry, I guess, that the traffic would be very heavily discounted and that prices would be very cheap, but perhaps that's not quite as bad as we expected.
Yeah, John, you're absolutely right. Yeah, things were actually starting to getting better, at least in the Chinese market. So the key issue is to get coronavirus, the new cases under control. So I think in the past few days, basically there were quite a few reported cases, and the U.S. consumer confidence would start to, you know, improve.
Yeah.
Every day with no news is good news.
Yeah, absolutely. Yes. Every day with less and less hourly changes to the market is good news. I'm interested, Cheng, to talk a bit more about what John was talking about, this interconnectedness that China has in both trade terms, but also in outbound tourism markets. So, you know, it's clear that many Asian markets and others need China's outbound market to recover. So, Brendan, I think you talked about getting back to domestic flying is the sort of the first step. You know, somewhere like Cambodia, where nearly 40% of all international capacity flies to and from China, and Thailand, where 24% is Chinese capacity, are particularly affected, aren't they? And I guess it's not just volume either, is it? It's the spend that goes along with this outbound market. We know that Chinese tourists spend more than any other nation, don't we?
Yes, that's right. Yeah, Chinese tourists are quite important to a number of countries in the Asia Pacific, as you point out, particularly to Thailand, Japan, Korea, Vietnam. So the current crisis has very big impact on those countries' tourism industry. So we see a lot of people have canceled their holidays, but once the situation has been, you know, calmed and recovered, then we are likely to see a bounce back. The demand is still there, but just it's being suppressed at the moment.
Yeah. I mean, certainly, you know, when we look back to other events, you always see a bounce back. You know, SARS, Ebola, MERS, all evidence that. I think the sort of fear and the concerns that are rippling through the industry are that this is entirely different in terms of the depth and range of impact. So it's, you know, it's encouraging to hear that that things are starting to change in China. I guess there's a couple of constraints though, aren't there? So if these destinations, perhaps beyond Asia, or still in some cases, some Asian countries are not yet through the peak of the epidemic, the pandemic, then that sort of hampers recovery of outbound tourism, doesn't it? And perhaps curtails travel to more short-haul destinations. And then I guess there's also an impact, isn't there, in terms of the economic impact of all of this means that we all potentially have less disposable income for travel, for leisure reasons. What's your perspective, Cheng, on the economy in China? Because we all know how important the Chinese economy is to the global economy. Are growth forecasts being revised in light of what's happened?
Yes, I think the economy was hit badly. So basically, we look at the data in February and March. You see, so like a GDP growth reduction up to 13%. Hi, okay, can you hear me? Yeah.
Yeah.
Yes.
Okay.
Yep.
Okay. Good. And so, but in terms of the airlines, the Chinese airlines lost around $5 billion in February and March. There's also so at the moment, so like $4.8 billion. But
Wow.
I think, but lots of companies or business now have returned to normal. We see people started to work, so that's quite encouraging. And the Chinese government forecast is still going to be positive GDP growth in 2020.
Okay, well, that's a really encouraging picture, isn't it? Okay, so I think now we're going to move on, and we're going to take a look at some of the carriers. So, world's biggest airlines, John, what's happening? I guess we've seen IATA revise their forecasts, haven't we, in the last couple of days of the impact?
Yeah, that's a modest estimation of $252 billion of lost revenue, which is, I think, 44% of the global aviation's yearly income. So big numbers indeed. What we're seeing now, of course, is some of the fallout from those changes in schedules, and you can see Ryanair, always a market leader, but probably not wanting to be the leader of this market, with a near 90% reduction in capacity, and then Lufthansa and China Eastern, and you know, these are the top 20 airlines in terms of capacity. So these are many of these are global brands, and to see this amount of capacity being taken out in terms of millions of seats is just staggering. And of course, this is just seats per week, and many of these airlines have elected to take capacity out until at least the end of April, and some as far as May. So we've got a, you know,
I've got to ask the question, John. Is this survivable for some of the world's biggest airlines?
It's certainly going to hit their cash reserves, and we're seeing all sorts of government intervention in most markets. Sadly, not in the United Kingdom, but you know, coronavirus and the event is sadly part of human nature, and the fittest of the fittest will survive, and that is likely to be the case in the airline industry as well. And there was a CAPA report that I think was published last week that warned that many airlines could go out of business, and I think that's a bit dramatic, and they got a great soundbite out of it. But there will be casualties, not necessarily at this end of the spectrum, but I think what I would term the mid-market airlines, those who are not operated in a niche type environment with public service obligations or other such structures, or are not of scale and mass, are, I think, those that will be most vulnerable. So yes, we will. But I think you know, when we went into this, there was an airline industry. When we come out of this, there will be an airline industry, but the size, shape, scale, structure of that will be completely different. And you know, I was on a panel last night, and I made the point: there's no reason for anyone to put a 747 back in the skies if they don't want to. As we come out of this, you know, why would some airlines continue to operate 747-400 aircraft when capacity, they have smaller capacity, demand is going to be shorter, they've probably got spare resources in their fleet? Do they need to be using those aging aircraft with their heavier fuel burn than perhaps other options? So everything is up for grabs as we come out of this. It's going to be a fascinating time, fascinating time.
I love your optimism. I love your ability to have the glass half full perspective. But Brendan, do you think we'll see airlines using this as an opportunity to sort of clear the decks and reorganize how they operate?
I mean, definitely we will see some airlines use this as an opportunity to restructure and relook at their fleets. The 747 is a good example. Even the A380 it has seen its better years, and it's decline from now on. And airlines, some of the A380s might not even come back into service because it's just too big. It's not the most efficient airplane, and from a cargo perspective, it doesn't have as much cargo capacity in the belly as, say, a 777 or a 747. So you know, we might see fewer of those, and the decline on that accelerated. In terms of airline bankruptcies, I just quickly address that question as well. I mean, nobody can survive this for more than a few months. It's just when you have this unprecedented, 95% decline in passenger numbers, or even 100% in some cases, and you still have all those fixed costs. You can draw down your cash reserves. You can sell some assets if some of your aircraft are owned, sell and lease back, and new bonds, new loans. But at some point, you just run out, and you also sacrifice your future, because if you have to raise all this new capital, you actually limit your ability to expand and flexibility later on. So, and that's why we're seeing governments respond, and it's imperative that the rest of the governments do. So far, we've seen about 10, 12 governments respond. Singapore just this afternoon is in the process right now actually of announcing a package. We saw the US just earlier this week. We're up to about 10, 11 countries, but we have to see something like 100 countries or even more come to the table here. And of course, the more countries come to the table, it becomes an unlevel playing field, because everybody's envy now at the U.S. carriers, who actually had the best cash position of everyone and were the most profitable of everyone. And now they got this huge package, and you have to level the playing field, and all the other governments have to, and then we won't have to worry about this threat of bankruptcy.
And Brendan, to your point, I mean, that unfairness is highlighted in the United Kingdom, where I mentioned the fittest of the fittest, should survive. The Italian government has stepped in once again and saved and brought back into public ownership Alitalia. I should think most Italians must be really proud in that decision. And likewise, Norwegian, who were in a similar situation, have had a huge bailout. And we have an irony in the United Kingdom that a very small regional airline called Flybe collapsed probably a month ago now. And if they had managed to hang on and linger on until this moment in time, and their business was fundamentally flawed, they would be in a situation where the government would probably step in and help them. So it's a global industry, and it needs a global solution rather than individual solutions to refinancing and supporting the airline community.
Yeah, and all airlines will get the same packages. We shouldn't be seeing too many Italy, like for example, hopefully they're helping out all airlines, although the other airline there, Air Italy, unfortunately went under a month ago as well.
Yeah.
So, but if they had held on, they, and it's important, to help out the entire industry. And it's not just airlines; it's airports, ground handling companies, catering companies, and so forth. But here in Asia, but your point about Alitalia and is a good one, because here in Asia we have several airlines as well that might not have made it through to 2020, even without this crisis, because the governments in some cases are not really willing to put more money in anymore. At least that's what they say. But now all of a sudden everything is different, and the government will put in more money because the situation is different, and the airline can come up with a better excuse, basically.
I think that's really dependent. It's really dependent, though, isn't it, Brendan, on the economy of the country in question, and I guess to an extent where they are in the curve. I think in Europe, where there are some countries who have grasped the metal, Norway and Italy, obviously being some of those, but there are others who are prioritising other things over aviation right now. And I think your point about needing a global, or perhaps it was John that said, we need a global solution to this, really resonates, because what we've seen in countries closing down borders and international flights being stopped all plays really into individual behaviour, doesn't it? Individual countries behaving in certain ways, and actually what we need as an industry is for collective behaviour. Cheng, I'm interested, we've gone slightly off our schedule of slides here, but I'm sort of interested in China. What's happening there to stimulate the market in terms of supporting airlines and aviation?
Okay, so we have seen that the government has been providing quite a lot of support to airlines in terms of reduction of airport charge, and also and also they're also supporting airlines, subsidizing them, and so that may help airlines to keep their fare low, so that they may stimulate some demand.
Great.
Yeah, and
okay.
And also we talk about the support. I think government support, I think it's quite interesting, because I think we can see a lot of governments around the world are providing financial state aid to airlines. I can see that at least the three approaches. One is that like the US style approach, that the government has given airlines like 50 billion US dollars, so possibly all airlines can get a share of it. And perhaps another approach that's on the other hand, we see the UK government don't provide at the moment, hasn't provided support to airlines, but they support employees. And we have also seen some other countries provide targeted support to certain airlines. So this may raise the issue about market distortion, I suspect. So it's quite interesting, to see which type of financial support is quite important.
Okay, Cheng, thank you. Thank you for your thoughts on that. We'll come back. As I said, we went slightly out of sync there, but we were going down that path. I think we'll come back just quickly. We can't forget about airports in all of this. As you mentioned earlier, John, we are starting to see some smaller airports actually shutting down now. And we have, of course, the Middle East hubs are closed temporarily. And I think the challenge for airports is, if you're in the middle of a big capital investment program to upgrade your facilities, holding your nerve, or being able to afford to hold your nerve, is a challenging place to be, isn't it, in terms of predicting how the industry is going to come back.
Absolutely. So, and to your point, if you're Hong Kong and you've nearly finished a third runway, or you've opened a new airport in Daxing, or any of the huge infrastructure projects that are going on at Tokyo Haneda for the new, what was going to be Olympics 2020 celebrations. Yeah, it's worrying times. There's huge amounts of investment, and of course that investment in infrastructure also drives other parts of the economy. The economic impact effect of aviation isn't just felt in terms of trade, but in terms of the investment that every airport makes. And as we point out here, many of these airports are so far down on their capacity and their operations that we're seeing dramatic steps being taken. And we mentioned
unprecedented.
I'm not going to use those words.
No, I know it's an overused word now, isn't it?
Absolutely. And I think what we're seeing is some really, really creative solutions, which just again shows how sharp this industry is and how some of the most brilliant minds come up with solutions to some of these problems. So we're seeing terminal satellite buildings being closed down in some locations, and operations consolidated, and airlines who had their own terminals now sharing with others so that we can keep airports open. And
okay,
I think it's just staggering.
Yeah. I'm keeping an eye on time. We've got loads of questions, so I would like us to be able to answer some of those at least on the call. For all of those of you who have submitted questions, if we don't get to answer them today, we will do our best to come back to you over the coming days. One last slide, really, to just talk to briefly, John, if you will. Can we learn anything from history? We talked earlier about SARS and other issues.
Yeah, I mean, we should always, I think, look back in history and see what it can show us and what we can learn about the future. So in this chart here, what I did was I essentially went back as far as 1996 and indexed the growth in frequency, so the number of flights around the globe, the increase in the number of seats, and two smaller sort of reference points around aircraft size and airport pairs. But essentially, the point is, there are a couple of points here. Firstly, over a very long cycle, the aviation industry is remarkably resilient, and even when things like 9/11 happens, and 2001 and 2002, you can see that impact. And then other things such as SARS and the Gulf crisis and MERS, etc. The industry does bounce back pretty quickly, although perhaps this event might be slightly have a more shallow response than previous occasions. But more importantly, I think it's the curve in the last 10 years and the rapid acceleration that we have seen in that period of time. And if I was doing some of my consultancy work, I'd actually be saying to someone, if I saw that curve, that is a risk. That is a risk because it is growing too fast, and it is not sustainable. And essentially, the event that we are now in is providing us with a reset. And that reset might make a lot of sense for an industry that wants to be both environmentally responsible and it needs to be profitable, that we perhaps think long and hard about some of the destinations that are served and some of the capacity and how markets are served, because we were growing perhaps too fast. And we've seen that in China's constant struggle to keep up with growth and build new infrastructure and new airports, new runways being built in various locations around the world, capacity expansion, the argument for the third runway in London at Heathrow, etc., etc. So perhaps what we're seeing here is a bit of a reset. And in the context of time, this will become a blip rather than a global meltdown. And it will be the fittest of the fittest that survive. And that may be what the industry has been looking for and waiting for. And consolidation will do no harm to anyone.
Well, you've preempted one of the questions that's come in, so maybe we'll take this opportunity to go into that phase now. Someone, Anton Stoyanov, thank you, has asked us a question about seeing this sort of drop off a precipice in demand for airline services. Is consolidation between competitors going to be the survival strategy going forward? Views on that, John, Brendan, Cheng?
I mean, yeah, I'll happily kick it off. I think it's inevitable. I think what will be interesting though is whether it's consolidation or it is picking over the corpses of those airlines that fail. There's been many European airlines who have been on the brink of failure, and someone said, why doesn't airline XY step in? And ultimately, the CEOs of those airlines say, why would I? I'll take the bits that I want after it's gone. So I think we will see consolidation, but I think a bigger issue is allowing increased foreign ownership of airlines so we can get rid of some of these archaic rules we have about overseas investment, because it doesn't apply to most other industries in the world.
Okay.
Yeah,
Brenda, what do you?
I mean, I think it's going to be regional. There's going to be different reaction regionally to this. You know, long term, we'll definitely see consolidation. Short term, it could depend on the region. Here in Asia, actually, we really need consolidation. We've needed it for a long time. The overcapacity issue, the kind of overambitious capacity growth has really been, a lot of that has been Asia, particularly Southeast Asia, and it's put pressure on profitability here. So we know a lot of the airlines weren't making money even before this crisis. But unfortunately, there's a lot of you know, barriers to exit is what I like to call it. And that's prevented consolidation. And the ownership one is one of the main ones, where you can't have the cross-border you know, acquisitions like you have seen in the EU, for example. You can't have that in Asia because of ownership rules. And there's lots of other challenges that keep on preventing the consolidation. And most of those challenges I don't see going away in the near term here in Asia. So Europe might have more consolidation because it's kind of a natural market for consolidation with EU encompassing so many countries. But they've already had a lot of consolidation, and actually we need it here in Asia, and it might not happen.
Yeah. Cheng, I have a question for you from Peter Keege. To what extent will Chinese investors in foreign airlines like Virgin Australia and Qantas use the market disruption to increase shareholdings in foreign airlines?
Okay. Was the question about Australia, in the Australian market?
Yeah. So to what extent do you think we'll see greater investment in foreign airlines? I think Australia was the example, but there may be other examples.
Yeah, I think you know, yeah, that's okay. That's an interesting question about foreign investment. As Brenda mentioned about you know, ownership control. So that's quite a big issue. So at the moment, you know, Chinese airlines can only be a minority shareholder. For example, HNA has got around 20% share at Virgin, you know, Virgin Australia. So being a minority shareholder, possibly, you know, that can't really play a very important role. You know, so I think that's sort of like issue. And Chinese airlines, I think they become more cautious. You know, in terms of you know,
understandably so. Okay, why would you?
Yeah, why would, if you can't have a majority shareholding, having seen what's happened in the last 10 weeks as another airline, why would you invest in another airline?
Here's another interesting question. So what do we understand to be the typical approach of lessors in these kind of crises? So thanks Cameron, Ahmad, for asking that one. Do they become generous to support airlines, or tough to recover their money before airlines start to get into bankruptcy?
It's an interesting question, and we're seeing some really very low leasing rates on aircraft, where one of our partners, Ishka, who are a specialist in aircraft leasing and valuations, are reporting lease rates for many wide-bodied aircraft have fallen by about 35%, 40% in the last 10 weeks as we've worked our way through this event. And there is lots of passenger capacity available. However, the lease rates and the market rates for cargo have in some cases increased by 6 times the level they were in January of this year, because of the urgent need for the movement of medical supplies and other, you know, equipment that will help us get through this event. And I've seen both American Airlines and other airlines converting passenger aircraft into pure dedicated cargo services to get us through this. So we're seeing some really entrepreneurial behaviour again on one side, and on the other side, we're seeing some people who are getting some, you know, very high cargo rates because of supply and demand.
Okay, thank you for that, John. So I'm conscious that we're now at 9 o'clock. We can take probably one more question. I think we need to wrap things up. Can we confirm the reason the USA looks largely unaffected is simply because they're still to share schedule changes?
Yes.
Now, John, do you want to talk to that?
Yeah, we can confirm that is the case. Watch this space next week and the week after as they come through. That was an easy one. Ask us a difficult question.
No, definitely. We have had some changes obviously coming through. The American Airlines are filing their schedule information, but we're expecting a lot more to come through over the course of the next few weeks.
Okay. All right. One very last quick question then. Based on the data from China, so this is from Tivadar Cortveles, what are our expectations when Europe and the US, when will these markets get to the bottom? That's a difficult question. Will we see 100% capacity reductions?
I mean, I'd like to talk about just you know, when will we see the bottom globally? And I mean, Europe and US is obviously part of that. In terms of capacity reductions, the bottom is likely pretty close, actually. I would say it's probably early April, right? Because we're going to be at a point already with 95%, you know, international reductions globally. Domestic markets vary, you know, between 50 and 100% depending on the market, but internationally, we're almost there. Right now, we have this kind of these pockets of demand because of the repatriation flights, and that's going to continue for another few days or another week. But so a lot of the airlines that have announced 95 or 100% reductions in international capacity or their schedules, it hasn't been implemented yet because of these repatriating flights. But once we're there and that repatriating phase is over, we're going to be at the bottom. Because you just don't get any lower. But then the question, of course, how fast the recovery is, and how long that bottom is, and then it becomes more of a regional question. I think, globally speaking, you know, it's anybody's guess because we don't know how long this is going to last. But you know, some pockets, some regions, like we're talking about North Asia, you know, domestic is first, and then international will pick up. So you might start seeing some China international travel, especially regionally within short haul Asia. You know, for those markets that have contained the virus and will allow the visitors again. So that's going to still be a couple months away probably, and then you know then it's going to be a long haul. But I really think from a international capacity perspective, we're actually going to be at the bottom at the first week of April. You know, and then
maybe we'll come back and revisit that prediction, Brendan, when we get there. This next week though, isn't it, or the week after? Okay. Just to say to everybody who's still on, we've got so many questions here that we're running on a little. In the interests of giving our panel the chance to answer some of these questions. Everybody who signed up and is listening will get a copy of the recording of the webinar. So if you do have to duck off, then you will still get to hear the end of the questions. John, I've got a question about oil prices. You know, to what extent is the oil price being impacted by all of the cancellations and vice versa?
Well, oil, of course, is at a ridiculously low rate at the moment. I think it's below $30 a barrel, which is probably the lowest rate for the last 5, 6, 7 years at least. But there is a supreme irony in this because some of the bigger airlines, the global brands, will have hedged their fuel price, and they would certainly not have hedged their fuel price as low as $30 a barrel. So they are locked in for what fuel they are using, and they may actually be in a situation where they have minimum guarantees on the amount of fuel that they will use and they have bought. They will be locked in at a higher price. So there's a bit of a double whammy here. It's not just the fact that the demand has completely evaporated from the market and capacity has gone with it because of the event, but the price of oil has fallen so far that for many carriers it is another burden that they are carrying because they will have hedged at prices higher than the current spot rate in the market.
Yeah, okay. Who is going to be worst affected, LCCs or legacy carriers, or is this does this go beyond the structure of the industry?
I think everyone's going to be impacted. I think many LCCs who live on a cash flow basis are obviously going to have lower cash reserves and going to be in a weaker position. And I don't include the likes of Ryanair, Wizz, Southwest in that particular group, but those smaller, low-cost carriers who don't have scale, don't have mass, I think are quite vulnerable at the moment, and particularly those who are trading in the long-haul low-cost market.
Yes, that's a very interesting point. I think, but I think once the market pick up, I think perhaps the domestic travel may resume before international travel, and in that case, perhaps low-cost carriers that may get like a better position because most of the capacity may be in the domestic market, while full service carrier traditionally have got more higher proportion wide bodies. Yeah, I think then yes, so perhaps when look into the middle longer term, it's going to be quite interesting.
Here's another interesting question. It's interesting to see alliance partners operating unilaterally. Do we think alliances will reform and align as a result of this?
Good question. What is it? Keep your friends closer, your enemies even closer. I think we will see some structural change. I think there was a bit that would have occurred anyway because of the One World Alliance and British Airways getting very close to China Southern, and there was some movement I think that would have occurred there. But I think, look, it's going to be a new brave world when we come out of this, and when we do, everything is up for grabs. I think the established principal partners in each alliance will stick together, but those bits around the fringes may be attracted by different options now that the world has changed.
And this really might be the last question, unless you answer this one as quickly as the first time I said this was the last question. What can airports and indeed destinations do in this market in these times?
Get ready and plan. Don't sit there contemplating what's happened. Think about the future, how you can help your airlines, how you can go back to market. Think about repositioning your product now, ready for the future. One of the best examples I've ever seen anywhere is Cancun, that was decimated by one of those tropical storms many years ago, probably 10, 12 years ago, transformed itself from being a 3-star resort destination to a 4/5-star by spending the time changing its product, making it right for the new market. Airports, destination marketing companies, whatever they happen to be, do that now. Get ready for the future, because by end of May, when this begins to pass through, you need to get out there and start marketing and getting your people back on your beaches and on your sunbeds.
So essentially, you use the time well, use your time wisely, use the opportunity that might be afforded to you to rethink your approach. Yeah. Well, sadly, that's all we've got time for this morning. If we haven't managed to answer your question during the webinar, we will do our best to reply. As I said earlier, we will send a recording to everybody, and we're also planning on sending out a survey after the webinar to get some feedback. So please do take a few minutes to complete that if you can. We'd really appreciate that. Thank you so much to the panel for taking time out of what is a busy time for all of us to join us today. And John, have you got a couple of things you want to say to wrap up?
Yeah, just a few things, and you know, they may be so obvious, but just to reinforce them. Update your data, increase the frequency with which you're taking data and looking at the market, because things are just changing so quickly and there is so much data out there. The most important thing is, you know, look for the changes, see what's happening, get those insights and be ready for the green shoots. We've given you a couple of pointers. You know, we have a lot more insights we can share with you about where we're seeing green shoots, not just by country, but by market, by airline, etc., etc. So take advantage of those. And finally, Deirdre. Sign up for our blogs. Every morning I get up at 5 o'clock. Every Monday morning I get up at 5 o'clock, which is desperately early, to pull the latest numbers. So just for my own peace of mind, if people do read it, it's normally up by 11 o'clock. At least I can sleep in the morning knowing that it was worthwhile getting up early. And also look at OAG's COVID-19 dedicated webpage, which has got regular updates and stories and blogs and insights for you, because we want to help everyone through this event together, because if we do that, the world will be a better place come May and June. Thank you.
Okay, thank you, John, and thanks to everybody. Thanks again to our panel, and we'll leave it there.